Let's ask Tony Pasquariello. He is head of hedge fund client coverage at Goldman Sachs. He's back with us at Post 9. It's good to see you. Welcome back.
Thanks, Scott.
Nice to catch up with you before we get out of here for 2025. You know, there's something to be said for seeing a durable trend, not making things too complicated, and staying with the story for a considerable period of time. I just described you because your point of view and your perspective on this market, from the notes that I have read consistently and mentioned many on the air, it hasn't changed. And you are, as you say, responsibly bullish, and that hasn't changed. Is that fair?
I'll take it. I think you just set me up for a giant jinx, maybe a sell-off. but I'll kindly take it. I would say this. I think the big dynamics in the game are still favorable for risk. We think the Fed will continue to provision more liquidity as we have this cyclical upswing in the economy. We've got S&P earnings up 12% next year, following plus 11% this year. And so I do think that interplay between the Fed and the trajectory of the economy alongside this earnings growth is affirmative of a bull market and a primary trend that's still higher.
You haven't been tempted, I guess is the word to use, by the broadening story peeling you away from what's gotten you to the dance this far. And it doesn't sound to me, from looking at your notes and your outlook, that you expect anything different in the new year. Stay big. Don't get caught up on the idea that small caps are going to have some epiphany in the new year and have a tremendous year at the expense of what's going to happen with the large cap stocks. Fair?
Still a believer U.S. mega cap tech will do as well or better than any other part of the market. I think some of the recent broadening you've seen, where some of the burden of leadership has shifted from the AI names and mega cap tech to large cap cyclicals, I think that's a good thing. And it's consistent with our view that the economy is going to pick up a bit of speed.
So that's durable then, potentially?
I think that is durable. So again, 2.5% GDP growth, moving up from 2% this year. So you got to go from trend to a little bit above trend. And again, what I think is so compelling about the view, if it's correct, is that S&P earnings growth now, in our view, starts to embed some of the AI productivity being delivered to large cap corporates. So I'd still rather make my bones with large cap than I would with small cap.
What about the idea that, okay, we know about the large cap story, know about all the CapEx and everything else, and then now it's time to really lean into the beneficiaries of all of the AI being put into effect, so to speak, from all of these other companies. And that's where you're going to make your real money in 26.
I think that would be a very tidy outcome for the market. And I do think, again, that is what we are baking into our equation when we say S&P earnings will be up again double digits next year. About 1.5 percentage points of that 12 is it attributable to the full index harvesting those productivity gains. So it's in the doing, of course, but I think that is the nature of the bet we're making when we're so positive on growth.
You sound kind of skeptical to that, though, when you use words like very tidy, in suggesting perhaps that maybe it's a little messier than that.
Yeah, well, I think this gets into some of the local narrative around tech, which is the market's asking more demanding questions around valuation, around financing, around returns, around the growth rate of CapEx. And so I would say I'm still a believer. You want to be open-minded about where all this leads, but the public market, as it imposes that discipline, is asking these questions, whereas in the 3 years heretofore, Scott, there was just a total simplicity to it, which is this is being funded out of free cash flow, don't overthink it. NVIDIA stock's up tenfold in 3 years because its earnings are up tenfold in 3 years. That is simple. I think it's getting a little bit more complex as we move forward.
Okay.